In this video, I'm gonna show you how to make $830 trading delta neutral option strategy on oil step by step. Let's get to it. Open your Tasty Trade account if you don't have one, link below. And by the way, hi, I'm on camera for the first time for this channel. Now, in here, go to watch list. Tasty has a lot of watch lists. You're gonna go here, you're gonna scroll to futures, and in futures, you're gonna click futures with option. What you need to do, you need to add this filter, IVX 5-day. What does it mean? I don't count, I don't. I care about statistics, I care about math, and I care about implied volatility. And every time that this price, all this is over 5%, 10%, depends on the asset, I pay attention. That means that the implied volatility have spiked. There's a change in implied volatility. Something is going on in the market, in the world, doesn't matter. It only matters to me because the options are more expensive. And if the options are more expensive, I can sell options against it. So you're gonna pick CL, this one, CLZ4. Why? Because we got 17.5% change in implied volatility in the last 5 days. Now, if you don't have the buying power for this trade to make the 800 bucks that I'm going to show you in a second, you can also pick the micro CL, MCL right here. It's the same thing, just 10 times less the buying power and 10 times less the income. So something to consider. You can play between those two, up to you. But first, this is what you need. This is the screen. Now, as for the indicators that I use, I care about ATR, average true range, right here. What does it mean? It means that the price that the crude oil have moved on average in the last 14 days is $2.26. What does it matter to me? Because I use math, I use statistics, I use extreme to my advantage. I take this number, the 226, which is this is the average price that oil have moved in the last 14 days. Every single day, oil moves on average in the last 2 weeks about $2.26. I'm going to multiply this by 8. Why 8? Because I want to go so extreme that that if nothing happens, in most cases, I will collect the money. And in this case, we're going to do a short strangle at delta neutral option strategy. So far out of the money using the 8 times the ATR, which gives me a number of 18. Okay, I have the number of 18. That gives me a range. Now with that 18, I'm going to add 72. Why 72? Because this is the price now, 71.98. Okay, and I have a range of $90 on the top side. Okay, we're going to sell a short strangle. I'm going to show you this in a minute. I have one side at 90 and the other side I'm going to take 72 minus 18, which put me at the bottom level of 54. Okay, so now I know my range for this short strangle that should yield about $800 for this trade that we're taking. We have a range of 54 to 90, and this is where we're going to put our short strangle, which will be a delta neutral trade. Other indicators that I use, just so you all know, this is the ST squeeze, which is a version of the TTM squeeze. I just like to see it's in the green. What does it mean? If it's in the green, then oil doesn't supposed to go anywhere, okay? If it's in the red, it's about to squeeze up or down, we don't know. So I take trades when it's in the green. This is an important one, IVR. You see the price right now of the IVR is 60.65, something like that. Anything over 50, you see this a little jump. This is the last 5 days jump, or probably from here. This is the jump, oh, right here, doesn't matter. Anything over 50, okay, that means for me, that's like a general rule for me. It means that the options are more expensive. And if the options are more expensive, I will be an option seller. So this is something to consider. And this one is the Kettler channel. Again, I changed the setting for the extreme. I changed to factor 8 and length 50, which it was like 2 and 20, something like that. I don't know. But again, extreme, which means that right now oil is trading in the blue line, which is in the range, exactly where I wanted. and the extreme, if it does go 8 times the Kettler channels, it will go to about 90, 89 in here. Remember, this is the 8 ATR that we found, and 50 on the other side. And if it does go there, we will readjust our trade. But hopefully it doesn't get there, and we'll close the trade a lot sooner. So what do we do now? Now that we have this information with the trade range of about 54 to 90, we're gonna go and we're gonna click trade. We're gonna click on trade right here. We're gonna change this to table right here, and in table I'm gonna pick this one, 41 days to expiration, December 16. You can pick whatever that you want, but I don't like the weeklies, even though there's a lot of liquidity in oil. I'm just gonna go to the 41 days, and I'm gonna do the following. I can either click short strangle right here and then change the settings. But before I put the trade, I'm gonna show you why Tasty Trade is so cool, because you see here the price, it says here in the money around 71, 72. And the brown line in here is where the market makers are expected the price to move. So if you see, if you scroll all the way up, they expect the price of oil in the next 41 days, and oil futures will go to about 64, 65. Okay, you see here we got $7 move. Okay, we are now at 71. They expect to go to 64. Now remember, we picked 54, so we're gonna go even lower. And you see this dotted line, this is one standard deviation. We're gonna keep even going further after that. We have this number 54, but I see the open interest right here. Open interest 13,000 is higher on 55. Okay, we're gonna click sell on the 55, which is next to the 54, which is 8 ATRs, and I like round numbers, so we got the 55 right here. 13,000 open interest, delta of 0.4 delta. We got a delta of 4. That is insane. So I'm selling. I'm not done. I'm just finishing up on the put side, selling the 55 put. Okay, 41 days to expiration. Now I'm gonna go scroll all the way to the call side. You see here calls. I'm gonna go all the way to the call side. I'm gonna pick the 90, give or take, depends on the liquidity and all that, and the income. And if you see, first of all, let's see on the call side, the market makers are expecting a move to about $78, 79 in the next 41 days. We're gonna keep going forward. We got the one standard deviation right here, this dotted line at 83, and we're gonna keep going until we reach 90. And if we reach 90 right here, we got 20,000 open interest contract. That's a lot. We got a delta of 11. The other one has a delta of 4. This is the 11 delta. We're gonna click sell on this one, and we got ourselves a short strangle, a delta neutral option strategy, which yield us right now $810. Let's go over the trade step by step. We are doing two options is simultaneously. We are selling a short strangle. However, we're doing it as a delta neutral option strategy. We are selling the 55 put right here. We're 41 days to expiration, December 16. We're selling the 55 puts. Remember the 8 times the ATR. 8 times the ATR. We're selling on one side the 55 naked puts. You can't do this on Robinhood. There's no naked puts and there's no futures, so that's out of the questions on Robinhood. We are selling on the other side, on the call side, we're selling the 90. And for this privilege, we are collecting right now into your brokerage account. You get back $800, $810 into your account. Okay, let's start from left to right. POP, probability of profit of 91%. There's a 91% chance that oil will trade between the lines. Your max profit, you gotta understand, your max profit is if oil right now at 72 is trading between 55 and 90. Okay, there's a 91% chance that it will stay in the next 41 days between 55 and 90. That's the trade itself. This is your max loss. I think this is like the extreme link. I don't know. I don't use this, but it's exactly like this one. Max profit. This is the money that you make. $810. And this is another important number, theta decay, theta, $40.40. What does it mean? Every day, if all else is equal, every day in the next 41 days, this option will lose $40, $40, $40, meaning that 10 days from now, this 800 numbers should be cut by half from 40 times 10 to 400. And if this is at 400 instead of 800 and you close the trade, you just made 400, you release the buying power, you move on, and you do the next option, Strangle, when you see this price above 10% or whatever. It depends on the rules. The buying power, this is why I like to sell options on future. The buying power to make this trade is $5,605. You are collecting $800 and you only putting on the line as of now $5,600. Now sure, if tomorrow post-election oil goes tomorrow to zero, it's a possibility. At the end of the day, it's a possibility. If we've been there before, then yeah, we are in a big problem. It's part of the game. This is why you get paid. This is why you get paid. There's no free lunches. If oil goes to zero, or if oil goes tomorrow to 100 and break our strike price tomorrow, not at the last day of expiration, that until then the option will decay. If by tomorrow oil trade at $10, $20, $100, 150, yeah, we kind of screwed. But this is part of the game, and this is why you trade small, you trade often, close the trade, move on, and yeah. But ideally it will not happen, and if it doesn't happen, which there's a 91% chance that this option will expire worthless, and every day this option will lose $40 of its value, then every day that 800 will go down by $40. Make yourself a target. Tasty say to close the trade at 50%. I close trades at 80% profit. It's up to you. It's your money at the end of the day. Collect $800 today. If you hold it till expiration, this will be 100% yours. The only thing that's on the line is the buying power. And if you do the math for this trade, if you collect 810 today and you put on the line 5,605, this is 14% profit on this trade. Okay, 14%. And if you divide this by 41, you make about 0.35% per day. It's pretty awesome in my book. It's not awesome until you close the trade for a profit. But 0.35% profit per day sounds good to me. Yeah, that's what I got for you guys. Subscribe, let's grow this channel. I'll see you next time.